This presentation is for information purposes only and doesn't constitute investment advice nor an offer, solicitation, or recommendation to acquire or dispose of any investment or to engage in any other transaction. All descriptions, examples, and calculations contained in this publication are for illustrative purposes only. The risk of loss in trading foreign exchange, futures, cryptos, and equity markets can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition. Past performance is not indicative of future results. My name is Ahmed Mukhtar Mirza and welcome to Level 3 Expert. This is Section 13, where we will study trading the rotation zone in conjunction with other trade triggers and strategies which we have studied so far in the past few sections. This is Lecture 1. Trading the R zone. In a prior class, you were introduced to the concept of the moving average R zone and how to construct a rotation zone. We use the 8 and 24 exponential moving average R zone, or we might use 8 and 21 EMA R zone for most of the markets. Trading the R zone takes some time and practice to understand and even more time to utilize for trade entry. Please take it slow and only practice these entry techniques in a sim account until you have mastered the many different R zone entry techniques. There are many different ways to trade the dynamic R zone. The entries fall into two different categories. Number one, using the R zone to enter trades triggered by another strategy, either on the same time frame or a shorter time frame. Number two, trades triggered by the R zone itself to get into trading price action moves. In this lecture, we will focus on using the R zone to enter trades triggered by another strategy on the same time frame. In the next lecture, we will examine using the R zone to enter a triggered trade on a shorter time frame. Same time frame. Using the R zone to enter a trade on the same time frame is a powerful concept in a number of different ways. It can be utilized by the trader to enter the trade if reward to risk ratio was below their minimum required level when the trade triggered. It can be used if the trader's position size was 0 when the trade triggers or less than 1. It's also helpful if the trader was not in front of their trading screen when the trade triggered as per his system due to the trade still being valid but reward to risk ratio being off. Here is an example. It's combination of multiple strategies here. We can see this is the combination of two. This yellow EMA, it's 8 EMA, and this is 21 EMA. So multiple concept and possible reasons. Number one, trader was not trading at 5 a.m. but is trading between 7:30 and 8:30 a.m. having stop below significant level resulted in a zero position size. The position size was not supported with the trade plan. If considering this blue line, as we have studied in significant levels, we generally represent it with the blue. So this is a significant level on weekly basis based upon the historical data, and at 5 a.m. here the trade was triggered, but due to some reason you were not watching it, then you'll have to wait. Risk and reward ratio was also incorrect here at this price, but when market pulled back and made a retracement, multiple concept, again testing this support line which was a resistance priorly, and kiss the trend line, multiple concepts, and due to the market retraced back, it came into this R zone which we are discussing here, this rotation zone, which is the combination of 8 and 21. So within this rotation zone, so there are multiple reasons to enter. Price was retraced and it gave us a chance with our targeted reward to risk ratio and position sizing after 1 hour. This is one of the examples. We'll study a lot more. So this is where we can use it for the entry purpose here. Combining multiple R-zone concepts. In a prior lecture, we covered the concept of lining up static R-zone entries with the dynamic R-zone moving averages. Some of the most powerful entries are when multiple things line up in the same area. More reasons, it's more logical to enter into the trade. Also, when it is the first cross of the dynamic R zone and price tests that area, some of the highest probability entries are formed. Here we can see the other example. It was trending up market. This is trend line, spot broken here, retraced back, case the trend line goodbye situation, also within the R zone of 8 and 21 exponential moving averages, so giving us 3 reasons here, and this 4-hour chart. So likewise we can use such situation for the entries. Dynamic R zone here, case the trend line goodbye after this breakage on this second test here, prior resistance becoming support here, and first cross of moving averages all coming together. Here it was the first cross here, we waited for the breakage. This cross indication was already here. This 8 moving averages crossed this 21. So it was first indication, second indication, retraced, tested again, third indication, and this dynamic R zone range, fourth indication. And then there are some this was the significant levels and some other reasons as we have been discussing. So this was the trade target if we bought it here, and the stop below this here, reward to risk ratio was well enough. So this is how we use multiple concepts, providing great entries. Because the trade has already triggered, the trader can just enter the trade somewhere in the R zone. The trader does not have to wait for price to begin to rotate back in the original direction of the move before the retracement. No need to wait for kiss the trend line goodbye if already position size and reward to risk ratio is well enough. Don't wait for better price once you already have logical trade trigger reasons. The trader can, however, always wait for the rotation to form for a higher probability trade. Valid strategies for entering on rotations. You have only learned the complete strategy for trend lines so far. However, the Ozone entries are not just for use in conjunction with the trend line trades. In future classes, you will learn the strategies like double tops and bottoms, horizontal channels, head and shoulders, flags, and some others. You can use the Ozone concept of entry for any type of these strategies to mingle up. Entering all trades on rotations. We are asked a lot if a trader should just wait to enter all trades on rotation. We believe that if when a trade triggers, all systems are go, then the trader should enter the trade without waiting for the rotation. By trying to enter every trade on rotation, you will end up missing the trades that go directly to the target without any retracement. Don't be penny wise and pound foolish by missing the opportunity if the trade is already triggered. Step 1. Follow the proper steps for the trade you are looking to take. For example, if you are doing a trend line trade, then you should either be following the steps we have outlined for taking a trend line trade, or you have made it your own. The steps you have outlined in your trading plan. Just follow your own plan to give you the confidence in future. Step 2. Wait for the trade to trigger according to the rules. The rules again which you have set for yourself. If when the trade triggers the position size drops to 0 or the reward risk ratio is less than the minimum the trader is willing to accept, then you can consider using the dynamic Ozone to enter the trade, and then it makes sense to wait for that. Verify that the dynamic moving average Ozone is close enough to the price action that if price returns to the area, the trade will not be invalid. So basically, if the risk management strategy are not lined up yet when your trade triggers, then you'll have to wait for the rotation zone since the price will trace a bit and it comes in valid stop range, giving you reasonable reward to risk ratio as per your own plan. Step 3. Use the position of the 8 EMA to determine if a pullback to that or will trigger the correct position size and reward to risk ratio. If the 8 EMA area does not provide the correct position size and our reward to risk ratio, will a rotation to the 21 EMA provide the correct position size and our reward to risk ratio? If that's the case, the trader can possibly utilize the dynamic moving average rotation zone to enter the trade. Step 4. Enter the trade in the dynamic Ozone. Since the trade has technically already triggered, the trader can use a limit order at the appropriate level in the rotation zone to enter the trade. The price can be calculated to determine the minimum level that will ensure the position size and reward to risk ratio are correct. Step 4. Continued. The trader can also wait for the more advanced confirmation by waiting for price to enter the dynamic Ozone and then turning back in the direction of the originally triggered trade. These kind of entries will be discussed more in future dynamic Ozone lectures. The conservative entry is especially important if, after the original trade triggers, price action immediately returns to the R zone with a very bullish or bearish bar. Now let's take step-by-step example practically. In the following slides, we will take you step by step through real market examples of using R zones to enter triggered trades, which is already triggered and we are waiting for the pullback, and use these R zone entries. Remember not to attempt this in your live account until several rounds of sim or demo account practice is identifying and executing this technique. Step 1. So here you can see this is trending upward sloping market. This is the trend line, and we saw here we are looking for the break to sell because we are planning to enter on the break of the trend line, and we foresee here the significant level drawn on the weekly basis is already there, and we see this is closing in line with this trend line. Close must be below trend line defining point and also into space, because this is the congestion area. We want to give a little bit room. Maybe if market breaks here and this is the congestion area and start moving upward and came back into the channel, so this is the target 1 and 2. It's end of the space as we have discussed in this space target, and this another advanced space finishing here. So we made 2 targets for this, and we will have a stop above this significant level if the market breaks somewhere here. Okay, this is properly set up trend line trade with significant level for stop placement and clearly identified targets. So here it broke. Trend line trade triggers. Make sure reward to risk ratio is correct and position sizing is correct as well. So above this is the stop. This is T1 and this is T2. And here we can see this R zone is also developed, and this is the crossing. This trade is in gold, GC, which is the future contract. Every tick is $10 and is valued per tick is $10, and the tick size is 0.10. $1 range in gold is 10 ticks and is $100 per contract, as most of the traders are already familiar. We are trading a $100,000 account at 2% risk per trade, giving us risk of $2,000 per trade. Therefore, our R is 2,000. The price when the trade trigger was 1589.6. Our stop was going to be 1605.3, and our first target is 1574.3. Our stop is 15.7 away from entry, and our target is 15.3 away from entry. So the reward to risk ratio is 0.97. Our position size is therefore 2000 divided by 1570, because 15.7 is the total stop loss point multiplied by 100, we get 1570. So this is 1.27 contract if somebody is trading standard lots. If somebody is trading mini contracts as well, he can either go for 1.2 or 1.3 contracts as well. Based on the position size, we could take the trade. However, the reward risk ratio is less than 1. Although it's close to 1, but it's less than 1. Because if minimum we set reward risk ratio is 1, means it should be 1 or better. So we cannot execute the trade based on the closing price. We are instead choosing to enter if price return to the dynamic moving average hour zone. Currently, the 8 EMA is at 1596.8. We can now calculate that our reward risk ratio and position size would be if price return to the 8 EMA area, because it will be retraced a bit, so resulting in less distance from the stop and giving enhancement to reward risk ratio. Currently the 8 EMA is 1596.8. If price return to the 1596.8 level, the distance to the stop will be 8.5 only, and to the first target it is 22.5. Our new reward to risk ratio would therefore be 22.5 divided by 8.5, which is 2.64, which is good to go. Our position size is now 2000 divided by 850. 8.5 points of gold multiplied by 100, 850. So it's 2.35. Again, if somebody is having a futures broker account, exchange based, and he can go for standard lots, he'll go for 2. If mini, then he can either go for 2.3 or 2.4. If somebody is trading micro account as well, he can go for exactly 2.35. It's up to you. This flexibility you can have in your plan. We can now place a limit order at the 1596.8 level for 2 contracts and see if we can get filled. So here trade was already triggered here, and market retraced back, entering the trade in the R zone at a limit of 15.96, which is here. Okay, and the high was 1598 of this bar at this particular point. So the limit order was filled here, and now as we discussed, stop is here. This is the target 1 T1, this is target 2 T2. Why it's a multi-target trade? As we have discussed in this space, this is the space available and this is the advanced space available, and this is the anchor point, but there are some wicks, so if we exclude this area, it makes very good sense to make the targets as per price action, and these are well met with our reward risk ratio. So target 1 and target 2 reach in the same bar here. Here one thing is important, you don't need to modify the targets. If you see the market is close to that, you'll have to wait, or you will never have any confidence, you'll be changing your own plans. So this is where we take profit at each level. Advanced techniques. We'll discuss one more concept. Many times on very bullish or bearish candles, or bullish and bearish moves, price will not get all the way back to the 8 EMA. Sometimes it looks like the 8 EMA did touch price action, but this happens after the close of the candle. that brought the 8 EMA into contact with the high or low. We call this situation the 8 pushing the price. This is the new concept and very powerful, especially in floating the profit for multiple target trades, where we have T1, T2, or sometimes T3 as well. So 8 pushing the price. How do we deal with the concept of the 8 EMA pushing the price? The point of entering in the R zone is to get the reward risk ratio and position size correct for our trade. It's not designed to enter on the full retracement into the R zone. On the emotional candle moves that trigger the entry, the trader can use this advanced concept to enter the trade. How to find the entry points? Since the dynamic R zone is in our favor, it should push price in the direction of the trade as a continuation trade. The goal is to find the price that is required to satisfy the proper reward risk ratio and position size. We then use that price, which will generally fall in front of the 8 EMA, as the limit price to enter the order. This is an advanced technique and should only be attempted after a trader is consistently profitable with the R zone trades. Here it is. Close below trend line and into space, position sizing and reward risk incorrect, must enter on rotation. So this is the previous line from the graph, and this is the start of the formation. Although the R zone is here already in this range, is an example of price not quite getting to the 8 EMA, because this is the pushing, 8 pushing the price. This yellow line is 8 exponential moving average, and this is continuously pushing in the direction of the trade like this. Calculate the price that gives correct reward and risk ratio and position size and place a limit order at that price, which is shown in this chart. Limit order filled here before dynamic R zone begin to push the price lower, as we can see it here. Assignment. Find a trend line trade that triggers with incorrect reward risk ratio or invalid position sizing based on a $25,000 account and 2% risk per trade. Then look for a valid entry in the dynamic R zone that produces a reward to risk ratio greater than 1 with the position size of at least 1. Summary. In this lecture, you learned about the concept of entering a trade in the dynamic R zone on the same time frame that is triggered on. Remember that if a trade has correct reward risk ratio and position sizing when it initially triggers, it is the best to take the trade on the initial trigger. If, however, the reward risk ratio and our position sizing is invalid, the trader can look to the dynamic R zone to enter the trade. In the next lecture of R zone, we will study in depth with the more practical examples. Thanks for watching. Watch it multiple times. If any concept is not clear, see you in next class.